work, social life, public systems. Nothing is the same anymore. All traditional ways are breaking down, in the wake of an infinite future. What remains constant are those which have stood the test of time. Love, family, values, and of course, the pyramids. The strongest shape ever built, which yet stands tall, after all natural and man-made calamities, for 4,500 years. We choose to model our financial planning based on the pyramid because the higher you want to go, the wider you must go. In other words, the higher glamorous returns you want, need an equivalent secured base. Let us start building our financial pyramid, with a steady base of protection. The objective here is to secure flow of income, against untimely death, illness or accidents with the help of term plans, Mediclaim and personal accident cover. We then add a layer of emergency funds, to protect against short-term uncertainties, like job loss or a family emergency. This has proven essential especially during COVID phase. The money for this should be parked in risk-free, fixed deposits or liquid funds. Now we move to investment category. Here we first have, risk-free growth segment, to protect our hard-earned money, and get reasonable gains on it. The good options here are provident funds, and sovereign guaranteed policies. Now that you have built a steady platform, you can look at growth investments, to beat inflation. The risk at this point is manageable because you have done the previous 3 steps. At this point you can start gaining exposure in equity markets via mutual funds. You have built a good risk appetite, on account of a really strong foundation, and now want to increase your wealth, at the rate much higher than the average of the country, by taking calculated risks. Here you can invest in stocks, derivatives and commodities. Finally, we look at the crown jewel of the pyramid. It can multiply your wealth into many folds, or completely erode it. That is why you invest in this category, only if you have a very high tolerance to volatility. Alternate funds, private equity, and venture capital are some of the options. In our experience, we have majorly seen 2 types of faulty plans. 1. Equity exposure without strong foundation. 2. Assuming that just a term plan is enough in foundation layer. In times of adversities, such unscientific financial plans are unable to stand strong, and collapse under the pressure of falling markets. For coming so long ahead, here is some bonus information for you. We skipped real estate in any of the blocks due to very low rental yield. Lakhs of empty flats, but no buyers. Little to none appreciation, in last 5 years. And it took on average over 6 months to sell a property in 2019. Be on the lookout, as opportunities may arise in the wake of COVID, if sellers get desperate and sell at heavy discounts. Be careful as you scan through options, as reselling with profit in few years may not be easy. This is ideal for first-time home buyers, who intend to live in it. Build your everlasting financial pyramid today, with VNG Capital.